Welcome to the Everyday Trader. This is Greg. Glad to be with you. And I'm joined here by Eric.
What's happening? It's Eric Hale. Before we get too far, like, subscribe, and comment. So give us some feedback, whether this hit the mark, what you think. Do you agree with what we said? Did we cover it in enough detail? There's something else you're looking for. So what are we going to talk about today, Greg, other than liking and subscribing on the video channel?
Well, liking and subscribing. We could talk about the team no-hitter that was thrown last night by the Astros.
There has been some very good baseball this World Series.
I'm going to have to agree. Some big home runs. Schwarber is coming up solid.
Ex-Cub, of course.
Ex-Cub. He got a ring with the Cubs, right?
Yeah.
He's on that team that won. So hopefully the series will end the last three. It'd be nice to see it go to 7 and have a walk-off home run by Bryce.
Were you a little surprised about Philly pulling that game off in Houston? That was a shocker. I thought he was going to take the first 2 games. So
impressed. So anyway,
no hitter. Yeah, it's pretty interesting.
Baseball's been good. World Series is always a fun time of year. My favorite time of year. This era, you've got college football in full swing. You've got playoff baseball. You've got the NFL is everybody's hurt and trying to manage working towards the stretch. I quit watching basketball years ago, but when Michael retired, Michael and Barkley, that whole era, Bird, Magic, when those guys all retired, the 2 guys out in Utah, Stockton, Malone, that was the era of good basketball for me. I'm just, these guys are boring anyway.
Well, I'm a little bit older than you, and I remember when the Celtics were back in the 70s and 80s, were dominating basketball. But we're not here to talk about sports. We're here to talk about what's happening in the market. Let's talk about. We got a couple of things to talk about. Oh yeah, I asked you what we're going to talk about. What are we going to talk about today?
The Powell pivot. Wait,
pivot? What is it?
We were talking about the Powell. I'm not changing course. And yes, we're raising rates. And why do you think I'm going to pivot? That Powell.
Maybe it's the Powell pounding because he seemed to bring out a big old sledgehammer. And we were watching the market yesterday. This is when the announcement came out. The market was open, and as expected, the market said, or the Federal Reserve came out and said, we're going to raise 75 basis points. That's pretty much what the market expected. And then the press conference happened, and then there was that one particular question. One of the reporters pointed out, President Powell, did you happen to notice that the market has responded positively to the 75 basis point increase? And he proceeded to pound the message home very clearly that we're not done. In fact, once you run what you took away from Powell's comments.
Well, my takeaway, to be honest, I still think there's a silver lining under it, because what he did say is we have the tools to fix it if we go too far. But he also very clearly said we're not done. And what we see pressure in inflation-wise, we don't see letting up. And we see a job market that is super strong. And no, he didn't say these exact words, right? But this is the message that I think you get from listening to him, is that their path, their raising rates is not done yet. And it may not be just the 75 here and the 50 at the next meeting, and then they pause for a while. I think there's an expectation that they may keep climbing and keep climbing. Now, they may slow down, and I think that's what the statement insinuated, that is they don't necessarily have to go 75 basis points every meeting right now to try to control inflation. But he also made it very clear they're not going to slow down. They're not going to stop and pause and wait because they feel like if they overshoot, they can cut rates again and do some quantitative easing and ease things back up if they overshoot. And in fact, he kind of insinuated, he kind of expected they're going to overshoot.
Yeah.
Which means I don't think they care if they send us into recession.
Yeah, they don't want, their goal is not to put us into recession, but it is to get inflation under control. It's pretty clear. Powell's words that it's very premature to be thinking about pausing, very premature. I think he came back and circled back around that. I'm surprised that the market, it's not, I mean, this isn't the surprise to me. This is the messaging that's been pretty consistent. And sometimes the market does what the market's going to do. We look back and say, the market must have expected something different because it did what it did. If I look at where we are, this is an intraday chart. So this was yesterday. We got the pullback, and then the day was pretty bearish and finished down significantly yesterday, and then today we're down again. If I look at, this is an intraday chart looking back over the past few days. Here's the daily chart. Let me just refresh this to see where we are. So zooming in on, we opened lower. We've traveled lower, but we've come back up a little bit. So we're only down about 1% on the S&P 500. I take that as a positive indication that we're not, heading much lower. I mean, it was a pretty bearish day. I'm not giving up on this bounce that we had starting, going back 3 weeks ago. We had that Thursday, with that big day after the CPI numbers, a very positive day. So I'm not giving up on the fact that we've seen this bounce. I think there's other reasons to be positive. And like you said, I take a very positive sort of message from Powell that if we do over tighten, no problem, we'll back off on it. So that should be comforting to people to know that, if we have pain, we're going to get through it. I think
the thing that probably has the markets reacting as bearishly as they are, I think you're right. You said that there was this expectation of, hey, they're going to forecast, they're going to put in some messaging to say, hey, we're going to slow down. We feel we've reached the plateau of what's needed, and we'll see what comes next. And I think that when the statement came out, that's what people read into. They read and they saw the statement of, hey, we're going to look and assess now what our movements have caused. And they acknowledged that their actions right now are a lagging type of effect. And so I think there was some hope that, hey, maybe they're going to slow down. And when he didn't, I think that took the wind out of the sails of the bulls that had pushed the market up for the last couple of weeks, with this hope that he was going to pivot at this meeting. But I think the other thing it's doing, and this will be the question mark as to whether you're right or not. I've read enough people who have, in the last 24 hours, who are now pointing out, okay, well, if he's going to do this, if they're going to keep raising, are they going to break something? And we saw the concern when the last time they raised, we had the issues that rose up in the UK and the UK's pension funds, and the issues there that the UK had to step in and basically print a bunch of money to help solve that situation in the short term. The question is are they going to push something until it breaks? And that's the big unknown, because I don't think they'll know until they break it, is the problem. And I think that's why you've got some people concerned right now of, oh no, we were hoping he was going to slow down. Now he's not. So let's start shorting the market again. And we'll see which force prevails here over the next couple of weeks. We have a pretty big event next week going on as well that could impact the trend of the current market, depending on the outcome of elections. I hope we know by the end of next week what the election outcome is. I think that could be the worst possible scenario.
So this is predicted.com, which puts odds on outcomes of different events. So there's other places to look for this information. This was just easy for me to get to, but right now the highest probability, you can convert these cents to probability. So there's essentially a 74% probability that the Republicans take control of the House and the Senate. And Again, this is not a political thing as to which parties. In fact, I think it's a little counterintuitive. Normally, if we look at markets historically, they tend to have done better under Democratic presidents. So this isn't and this is not a presidential election. This is Congress. But as we've made clear before, a deadlock Congress is generally better for the markets. It's not kind of a it's because of regulatory certainty, really, is what it comes down to. It's not some sort of perverse thing that happens with the parties. It's just when we get a deadlock Congress, we tend to have better markets. So there's been a lot of data, a lot of talk, and we talked about it. It's still looking for it. So this event that happens next week, keeping an eye on that election, watching the probabilities, see how things change. But right now, it's looking pretty good. I'd put my money on Republicans winning the House and the Senate. And then again, it's also not about absolute control of the House or Senate. What's interesting is that you tend to see people emerge that tend to go to one side. I think of Joe Manchin in the Senate, who tends to caucus. He's a registered Democrat, but sometimes votes with the Republicans as well. So having split, even if it's one-sided, we could still have some splits, and that's what it's looking for. I think if it was very, very lopsided, that actually might be bad. So keeping the drama high, unfortunately, is probably what's going to be good. One other big thing economic that's happening this week, though, is that is the jobs report on Friday. The Fed does look at this. The Fed wants to see it go higher. I've heard 5.5% unemployment would be acceptable and is anticipated. And right now, we're just looking at the previous this week, the JOLTS report. When we look at vacancies over unemployment, that ratio is getting more and more bullish, I should say, that we still have a big rise in job openings this week. So the labor market is doing very well. ADP report was pretty good, and I expect that the employment situation on Friday's gonna underscore that. What's your thoughts on how the market reacts to a strong unemployment report? You think we're gonna?
I think the market gains momentum to the downside.
Yeah.
Because that's one of the things that we both talked about. The Fed can keep raising rates as long as the job situation is steady. Because to be fair, it's really hard to say we can go into recession with his full employment. Yeah. I mean, if everybody's got money and everybody's able to pay their bills, they're going to. They're not going to stop. They're not going to miss their mortgage payments and default on debt and all of those things that usually come along with an economic slowdown. They're going to keep paying their bills, and therefore we'll kind of stay on top of things. The question will be how fast it goes from the full employment situation that we've got to that 5.5 target that you said the Fed has kind of outlined that they're okay with that number. I don't think it'll happen very fast, but if it did, that for sure could shock the markets and cause them to actually, ironically, go up if we got a really bad report. But I think we're going to get a good report, and I think that's going to be a bad thing for the S&P, because at least it's going to be a bad thing for the NASDAQ. It's still been interesting to see the divergence in the sell-off. It's still definitely heavy tech side. I mean, right now, as an example, the NASDAQ's down almost 2%, what I'm showing about 190 points to the downside, whereas the Dow's only down 70 points, or about 0.2%. So there's still a lot of Dow components, the old world stocks, that we're seeing this divergence. And so I still think there's opportunity to trade even as the Fed does get more aggressive. I just think you have to be really cautious stepping in and buying some of those big names like Meta, that's down 75%. Even though it seems like, this is a great time to jump in and buy this because it's down so hard and it's not going away, because it's not. Same thing with Google and Apple and NVIDIA. But I think you just have to be cautious because this rate increase is going to impact those stocks with high PE ratios and exposure to the high growth much more than it will a company like Chevron, Texaco, or ExxonMobil.
AMD had earnings yesterday, very positive, and the market seemed to like it too. I mean, we didn't get a big move up, but it didn't follow suit with the other big tech companies and what we've seen.
Yeah, a lot of the semis are actually green today.
Was it NVIDIA? Oof.
Yeah, I think NVIDIA's green today.
Yeah.
Micron's green today. I'm sure on the heel of those AMD earnings. You know, I had another little stat I wanted to throw out. I was reading, I don't know if you follow, I know you've met her before at Kotak. I met her at the economics, the Bronze Buffalo Economic Summit before. I don't remember if you met her there or not. And now I just lost her name.
Catherine Mann?
No, she writes the Quill.
Danielle DiMartino.
Danielle DiMartino, yeah. I subscribed to her Quill newsletter, and she wrote some stuff today that was really mind-blowing. I hadn't looked at that. Let me see if I can find this stat real quick. It's from Wells Fargo. Wells Fargo announced, here it is right here. Wells Fargo says that its retail pipeline early in the fourth quarter for mortgages. So she's talking about how bad the mortgage market is right now. And she had talked about a Connecticut-based Promontory Mortgage Path that's closing their doors. 200 people getting laid off with that. But here's the Wells Fargo. Wells Fargo is expecting to go from 4,000 mortgage officers to 2,000. So they're laying off half of their mortgage staff. And they're saying because the reason for that is their retail pipeline has fallen 90% from a year ago.
I did jiu-jitsu this morning, and my professor, the lead instructor, was saying that he was just talking to a friend of his yesterday who owns a mortgage company, and he's selling his business because it's so bad.
No, that's where the slowdown's going to eventually hit us. And I know I said that when I was I did the Options Animal Weekly last week with Horace and Joe. And that's one of the things I was talking about. I know I shared the stat with you last week, the home builder in Utah that is doing so poorly. And I actually think that's the part of the economy that we're going to have to look at in the first part of next year in Q1 to really see if something there is going to break and cause some real economic slowdown GDP wise for the country, as well as the unemployment situation, because this is just the mortgage sector, right? There's so many jobs tied to the housing sector that as it rebalances, we'll see. I hope my county readjusts my tax assessed value on my house, because they sure adjusted it up really fast. The fastest I've ever seen a county adjust the price of a property in the last year. I hope they adjust it back down when my home falls in the next 6 months and a year.
I'm sure they will.
I'm sure they will. Sure they won't. Anyway, love property taxes.
I was just doing some stuff for some insight on mortgages. Something definitely to keep an eye on. In terms of economic stuff, we don't have any. Maybe next week we have economic stuff, but let's see what's next week. We don't have a lot of housing data next week, so it'll be interesting to keep an eye on, because CPI is the big one on Thursday.
Yeah,
that's keeping an eye on that. What do you think, sort of changing gears here? So I'm actually due to enter a trade today to share with our community. So I'm thinking about doing something probably out of the box, George Costanza, as I'd call it. and that's probably a bearish trade on a stock I'm okay taking ownership on. So if it goes against me, I'll buy the stock. But I'm still of the mindset that we probably have seen the bottom for the year, and that we're probably going to go higher from here. So I could be wrong, and I would certainly be okay with that and adjust it if I need to. But I think we're going to go higher. That's still my forecast. What's your thoughts for the rest of the year?
I think a lot of it will depend on the next week as to the momentum for this this current rollover that we have. If we push back towards the lows, I think there's a chance we get momentum to the downside and it finishes the year really ugly. I don't think so. I think for the most part, the weakness, I think the Fed's price cuts have mostly been priced in, or the Fed's interest rate increases, have mostly been priced into the level of markets. I think the biggest question people are looking at are, what is this? Are we going to go into recession or not? And so maybe people starting to pay more attention to jobs data. And if we can get some jobs data, if we get some decent Christmas spending numbers, if the holiday season starts to pan out, I think the market can get excited into the year end. But I don't know. It's hard to be a bull today. That's for sure. Here's the hard part about me being optimistic about the market, that the selling is done. This sell-off all year has really been pretty methodical. I haven't really seen very many days where it's panic in the streets, blood in the streets, everybody sell everything, go away. We haven't had those type of events yet. We had a few of them a few weeks ago. They kind of felt a little bit like that, but then it stopped. And for some reason, people stepped in and bought the market. So I haven't seen real panic selling yet, like you usually do when the market finally decides to put in the bottom. Now, maybe that won't happen until first quarter of next year too. So seasonality has me being relatively optimistic. I want to think that we can rally into the end of the year, but last 2 days have been tough for sure.
Yeah, I was talking to a reporter at Wall Street Journal, and she was asking me if we've seen capitulation yet. And I think it's funny that the people who have only been trading for 10 or 12 years haven't ever seen capitulation, so they don't know what it looks like. Like we're not even close to capitulation.
No.
Not even close. And it's funny that I see following some of the social media, financial social media that's out there, people saying, "Oh, this is capitulation." Oh no, sweetheart, this is not capitulation. We're still a ways off from that. I don't know that we have to see it either to put a bottom in, but yeah, going back to 2000 through 7 and 8 through 9, early 9, 2009, that's really when we definitely saw it then, and you knew when the whole market just puked out. Any other thoughts about what's going on? I don't know if you, I know you like to watch Twitter, but there's been some interesting drama with Elon Musk, Twitter not being publicly traded, but I don't know if we want to go into it. There's nothing to trade, but it sure is entertaining.
It's still a fantastic tool, especially in the financial world. I thought, I think you actually retweeted it. Jim Bianco had a really good tweet this week about the Cleveland Fed.
Yeah. They have a flash forecast on inflation. So that Loretta Mester's team puts together a high frequency outlook of inflation, and it tends to be low, right?
Yeah. No, yeah, but I know that's not what you were asking about. You were asking about what Elon's doing at Twitter, and I actually love it. I think that for the longest time, Twitter has been a joke of a company, and has been a manipulated platform to suit certain political views. And maybe arguably, some people would argue that, well, Musk's just doing it in the opposite direction now, which I disagree with. I don't think he is. I just think he's leveling the playing field now, finally, on Twitter. But I don't know. I know people have their different opinions about Elon too.
Yeah. I think if anybody's on Twitter, a good place to start. Of course, following Greg and following Eric, but Bianco's a good one to follow. I actually am friends with Jim, and people don't know this. He's an avid, maybe you don't know, he's an avid cyclist. And I also follow him on Strava. And yesterday he had a very massive ride. It's pretty funny because I guess he was pretty worked up after the Fed meeting, and he went out and got on his bike and he crushed it. He had some personal records on some of the segments. I went out and had a good ride yesterday too. But it's funny that Jim's a good guy to follow because he's able to, I think, let go of a lot of biases and sees through. Sometimes it's depressing and hard to read him, but you can always count on him for giving you what he thinks is, an unbiased opinion that doesn't sort of march with the beat of the drum with everybody else. All right. Well, I think that's probably enough for today. We just wanted to do a quick check-in of what's going on, and see where the markets are heading. Any other thoughts before we wrap things up, Greg?
See what jobs report does tomorrow, but my guess is trend is lower, and hallelujah that we understand how to do the collar trade. If you have any questions about the collar trade, come on over to OptionsANIMal, OptionsANIMal.com. Sign up for one of our free classes over there. We'll teach you exactly the trade on how to survive this specific type of market we're in. So,
example I was showing you ahead of time. I own Apple right now, and I'm actually making money because I'm in a collar trade. I'm actually making money with Apple dropping down right now. So it's
and you're not net short.
No, and I'm not net short. So it's Apple, just to put things into perspective. So today down 4.23%. And if Apple went up, I'd make money with Apple going up too. So you give something up in terms of the magnitude of how much you can make, but you can actually make money in both directions. And I'm in a trade right now that does that. Makes money if it goes up, makes money if it goes down. Going down, I'd rather it didn't, but I'll close the options for a profit and then take the next bounce up. So it's a fantastic trade that allows you to keep a smile on your face when your largest position is down 4.23%. All right.
Yes. Okay. Thanks. Good talking to you, Eric.
Good talking to you too. If I don't talk to you, have a good weekend, and we'll see you next week.
Yep. See ya.